So the Fed paused their rate hikes after 10 consecutive rate hikes and the fastest rate hikes in the last 43 years. Since the 1980s, they finally paused. However, they paused with a very hawkish tone. They're saying they're going to do more rate hikes later this year and that there's not going to be any rate cuts this year. So what do we make of this? What is the real message that they're trying to convey? Well, first of all, what the Fed can't do is pause the rate hikes and make it seem like this is the end. Because if they did that, then the markets would rally like crazy. If they came out very dovish and they said, we're done with the rate hikes, we're going to cut rates in the next 6 months or early next year, the markets are going to rally and inflation could possibly come back. So really, their only choice was to raise rates in a very hawkish, pause the rate hikes in a hawkish tone so the markets don't take off and things ease, and they give themselves the option down the road to continue to pause or cut rates. Just because they're saying we're going to hike rates down the road over the next few months, from now to the end of the year, there's going to be more rate hikes. Just because they say that, we know that that doesn't necessarily mean that's going to happen for sure. They might raise rates, they might not. Okay, there's a chance they don't raise rates from now to the end of the year and they start cutting early next year. But by taking the hawkish stance, they're giving themselves that out. And if they do raise rates from now to the end of the year, whether it's 25 basis points twice or whatever, it's not catching anyone by surprise because that's what they said they're going to do. So the mortgage rates didn't really move today based on this news. Yesterday, they shot down and then shot back up. So really a net neutral, not a big difference, not a real difference at all after yesterday's news. With the CPI report, inflation is coming down. Year over year inflation yesterday was reported at 4% year over year for the month of May. And if we remember, last June, we had peak inflation at 9.1%. So next month, when we get to June year over year reading, we should expect something around 3.5 because we're coming down from our peak. So again, trending in the right direction. We like what we're seeing. You can break things down. You know, some people are talking about used car sales and groceries and new car sales and housing and rent. In the big picture, just to keep things real simple, inflation's coming down. Yes, you are going to see month to month inflation go up because you're going to hear a lot of people say, well, month to month, you know, inflation still went up 0.1%. But you got to remember that's normal, right? If inflation's going up 0.1% every month, that's 1.2% a year, much lower than the Fed's target of 2%. Just keep that in mind. Overall, I think this is great news. Even though mortgage rates haven't changed much, the stock market didn't move much, crypto didn't move much. This is good because in the big picture, we're headed towards our target of 2% inflation, something we're freaking tired of talking about over the last year. I'm sure, you know, I myself, I'm tired of this story of inflation. I want to, you know, put this behind us, move forward so we can get back to how things were, which was just slow, continued growth in stocks and crypto. I think there's a lot of green pastures ahead. I think once we get past the next 6 months, 2024, I think we're going to see stocks rally. We're going to see crypto rally. Real estate's going to pick back up. We really need mortgage rates to come down to help with our inventory crisis. You know, I don't know, there's still some YouTubers out there who are saying, oh, there's crises, housing bubble, housing market crash. This is just ridiculous. I can't even believe that people have the nerve of still spitting, you know, the stories of housing bubble and housing crash. We have record low inventory in the real estate market. Record lows. I mean, there's such little inventory out there, even rates around 6 to 7%. You're still getting 5 or 10 offers on properties. Anywhere desirable. Yes, again, I'll always put the disclaimer, depends on your region, depends on your city, depends on the pocket of where that piece of real estate is. But most desirable areas, even somewhat desirable areas, are getting multiple offers. So the reason for that is very simple. A lot of people locked in their mortgages at 3% or lower. You know, I've talked to probably 5 homeowners in the last 2 weeks who've locked in under 3%, right? So if you're at a 2.8, 2.7, I have one friend who's got a 1.99. I have a past client, one, who has a 1.99 on a 15-year. No one's going to sell that property because you're not just selling the property, you're getting rid of that 3% rate or lower. No one wants to do that. Whether it's your primary residence or if you've moved and now it's an investment property, no one's going to sell a property with a 3% rate or lower and then go buy something else at 6%. The difference, the jump in your payment is just too high. The jump in the rate is too high. No one wants to do that. But once we get rates trickle down into the 5s, I think once we're under 5, once we're in the 4s, 4.5 to 5%, that's where the standard rate is. That's going to be the sweet spot. That's where someone is going to look at selling their place and trading a 3% or a 3.25 for a 4.75. Going from 3.25 to 4.75, I can stomach that. It's not the best scenario, but I've been putting off moving. I have more kids now, or I'm an empty nester, whatever the scenario is. People are putting off selling their home because they don't want to trade that interest rate. They don't want to go from 3 to 6. But if they're going from 3 to 4.5, I think a lot of people are going to make that move. We're going to see a lot more properties hit the market. We're going to see a lot more activity, and that's going to help relieve some of this pressure. Because right now there's pressure, buyer pressure, because there's a lot of buyers, not enough inventory. We need some more inventory. And again, that's not even, there's a chance that might not even solve the problem, because once rates come down, you're going to get a flood of new buyers as well. I don't know if you guys know this, but every 1% that rates come down, 1 million more Americans are eligible for a mortgage. So we'll see. I think rates coming down is still going to help overall. And only time will tell. You know, I'm not batting 1,000 when it comes to these predictions. We all can make, no one's perfect. We can all make mistakes, but at least we can educate ourselves and prepare. I still think the best thing you can do is buy real estate, buy, dollar cost average your stocks, your crypto, continue to add properties to your portfolio. Real estate is not going anywhere. So that's my 2 cents. Only time will tell. And we'll see what the Fed does moving forward. We have 6 more months till the end of the year. We'll see if they actually stick to their word, because they're saying they're going to raise rates 2 more times. Let's see if that happens. I have a feeling that may not happen. If we continue to trend lower with inflation, I think there's a chance this may have been the last rate hike. Again, I could be wrong. Even if we have 2 more and that's the end of it, good riddance. I'd be so happy to put this whole inflation BS behind us and we can move forward. I'm sure you guys are all tired of hearing about it, as am I. But thankfully, we're headed in the right direction. Thank you so much for your support. Please like and subscribe. See y'all in the next one.